Japan reported its consumer price inflation reached its highest level since November 2008. CPI rose 0.8% year-on-year in August, which was just above expectations of 0.7%. The rise was sparked by increasing gasoline costs and a weaker yen that inflated the price of food imports. Many analysts believe CPI will surpass 1% by the end of this year, boosted by rising energy and food prices. The price of durable goods such as personal electronics also increased for the first time in 20 years. This may reflect a positive sign that Japan is exiting from 15 years of haunting deflation. The country's economics minister, however, warned that wages and prices excluding energy costs must increase more before they can officially declare an end to deflation. At a news conference today, he stated, "Japan is in the process of emerging from prolonged deflation. An exit from deflation will become distant if we're seeing costs push inflation, where wages aren't catching up with rising prices." Most recently, policymakers have been putting pressure on the private sector to raise wages, which would help push up inflation. However, progress remains slow, with nominal cash earnings growing only 0.4% in July, down from 0.6% in June. Chief economist at Daiichi Life Research Institute in Tokyo said the rise in prices of daily necessities is negative for household sentiment and consumption. Companies may raise monthly salaries slightly if the economy remains in good shape, but that won't be enough to offset the decline in real household income next year. Despite the progress the economy has made this year, Takeshi Fumaki, who is a member of Japan's upper house of parliament and a former advisor to billionaire George Soros, believes Japan will be hit by a fiscal crisis and a higher sales tax nor the 2020 Olympics will be able to prevent it. This week, he said, "I decided to become a politician because I think financial crisis will come sooner or later. This total debt will continue to increase. I don't think Japan can survive until 2020, based on what happened in Russia when it defaulted in 1998. He says yields on 10-year Japanese government bonds may climb to 70%. The benchmark yield is currently the lowest in the world at 0.68%. Well, viewers, that is it for right now, but do stay tuned to Dukascopy TV and do watch the weekly wrap-up. Goodbye for now.